Hello, everyone. How are we doing today? Thank you for joining today's presentation. I'm just quickly opening up a couple of windows which I need for this presentation. If you just give me one moment. I also want to make sure I have the chat window open. If you bear with me for just a second. Okay, I think I'm ready to go now. I do see that we have a couple of people still joining us. Perhaps we could just wait for 2 more minutes before we start. Okay, this is the third webinar of three webinars. I'm going to have to just show the disclaimer again because I forgot to show it. I forgot to start the recording. I apologize, everyone. A bit of an early morning for me here. In the US, it's 4 a.m. And I'm not through my espresso as yet, so I'm not at 100% CPU. So it's going to be an interesting webinar today. Okay, so there we go. I've shown the disclaimer, and we're going back to the FE Markets website. We're going to be using a tool called the Autochartist Risk Calculator. The tool is free of charge, right? So you don't need to worry. I'm not trying to sell you again. I keep on repeating the same thing every webinar. In today's webinar, just put your sales guard down. I'm not trying to pitch you anything or sell you anything. Just listen and learn. Hopefully, the way to get information about this tool is to go into the platforms. There's a link called Autochartist. There is a whole section about the tool and the product, some educational videos. But in order to actually download the product, you need to log in, right? So you need to actually have a live account. And if you log into the client portal, that's where you'll be able to get the MT4 download, the MT4 plugin download. If you don't want to do all of that, I'm sending a chat message to your chat window right now with a link of downloading this plugin directly from our website. Again, there's a couple of educational videos, and if you watch all 4 of these educational videos, essentially you'll walk through a lot of the content of how to use the tool, stuff I've covered in the last 2 webinars and in this webinar today. Now, today's webinar is not about the Autochartist Expert Advisor that we installed in the previous 2 webinars. Today's webinar is about the Autochartist Risk Calculator. Now, I'm just going to open up my trades window, and we're going to place a couple of trades today. So I'm going to get going on picking a few random currencies to trade. If any of you have any specific currencies you want me to look at, please just let me know in the chat window, and we'll look at those currencies, and we'll actually place a couple of trades in the market in order to show you how to manage your risk. All right. So let's just have a look at a couple of currencies. Let's look at AUD. Hourly chart. Wow, it's run up a lot. Okay, so let's just take a couple of trades. So the big question about risk management in FX is quite simple, actually. If I'm looking at the Australian dollar, US dollar chart, and I want to open a position, let's just say I want to open up a position at the current price, right, 71.95, and I want a let's just make it 71. Let's make it 72, right? And I want to set a stop loss over here, right? I'm looking at whatever it is, 15 pips in as a stop loss, right? 15 pip stop loss. For AUDUSD, this is really easy to calculate. It's $15 times 15 times 10, so it's $150. Or if it's a mini account like I have here, it's $1 a pip, which means is that's $15 that I'm risking for this trade if this is where I set my stop loss. Really, really easy, right? But it starts getting more complicated when you're not looking at a base USD instrument like AUD or Euro. When you start looking at things like USD CAD, USD Swiss franc, yen, crosses like AUD CAD, AUD Swiss franc, where there's no USD involved at all, even, okay, or exotic pairs, to start trying to figure out your stop loss size or your actual risk in pips gets pretty complicated pretty quickly, right? And so this is the first problem that people face, is they don't actually know what stop loss they're setting. The second problem that people face when setting stop losses is that let's just assume my strategy tells me to open a position right now and at the spot price on AUD USD, and I need to set my stop loss here at this level where I've put my red line. But now this is, let me look, this is about very small numbers I can't see with my old eyes, about 50 pips in risk. 50 pips, $50 might be more than I'm willing to risk on this trade. In which case, what do I do as a trader? I start moving my stop loss up and up and up until I see my risk level is acceptable to me. Now, this is fundamentally the wrong way to set your stop loss. Okay. And now you think, hang on a second, what do you mean, Ilan? How can moving my stop loss closer be the wrong way to manage my risk? Let me explain to you what actually should happen. You should always set your stop loss where your strategy tells you to set your stop loss. What you need to do to manage your risk is to reduce the volume that you're trading. So if 50 pips or $50 is too much of a risk, instead of trading a single lot, you should be trading half a lot, right? 0.5 of a lot. Let me show you a few examples. So we've got, okay, Doug, you're telling me to trade AUD Kiwi, all right? So let me come back to that one after I've traded AUD USD. So let's look at AUD USD now. I want to see what to trade here. Wow, it's run up a lot. Maybe this isn't a good one to trade. Let's see what it looks like on the daily chart. Okay, what do you guys reckon? You reckon it's going up, or you reckon it's going down? Okay, anyway, let's try it and see what happens. I'm not quite sure about trading this instrument that's run up so much, but let's give it a good try. Okay, so what I'm going to do is I'm going to trade AUD USD short. I think it's going to rebound. I think it's been a massive run up, and I think it's going to rebound. So what I'm going to do now is I'm going to drag and drop the Autochartist Risk Calculator onto the chart. And an orange line appears. Now this orange line, I'm going to set where I want my stop loss to be. Okay, so if I'm going to look back in the past, see where a previous kind of support or resistance level was. I'm going to set my stop loss around this level over here, which my risk calculator is telling me is around 26 pips in risk. So now if I want to risk $50, because my current balance on my account is just under $1,000, so I want to risk, let's say 5%. It's a little much for me, but let's use this as an example. So what it's telling me, what the risk calculator is telling me, is that if I'm placing a trade short at the current price, and I want to set my stop loss 20, well, now it's 27 pips away, all right? I need to trade a volume of 0.2 or 0.19. Let's see what that looks like. I'd open up my trade window. I'd set my volume to be 0. Well, looks like 18 now. Set my stop loss at the level where I set my orange line, and I would sell at market. So now, remember, keep this trade in mind. I traded Australian dollar on the 1 hourly chart with a 26 pip stop loss. Okay. Now let's trade what Doug wants me to trade. Aussie Kiwi. Here we go. Ooh, nice one. I see why you asked me to trade this. Looks like there's a lot of interesting movement happening here. Let's look at the daily chart quickly. Okay. Which way do you want to trade it, Doug? Any idea? You want to trade it long? Do you want to trade it short? I personally think we should trade it short. Okay, let's trade it short on the daily chart. Okay. Because the reason I'm saying on the daily chart is I'm noticing a lot of very interesting, wrong color. Let me use blue. I see a lot of interesting support resistance in the past around the level of 106.20. So I'm going to trade this short, assuming it's going to rebound. Okay. And so what I'm doing now is I'm saying, okay, if I'm setting my stop level at this orange line, I want to trade short, that's about a 48 pip stop loss. Okay, keep that in mind, 48 pip stop loss. And this is a daily chart, and there's no USD cross. This is not a USD cross, right? This is a cross pair of Australian dollar against the New Zealand dollar, right? So there's no USD involved. So a pip is not equal to $1. So let's see what the trade would look like. I would set my volume size to be what the Autochartist Risk Calculator tells me to set it at. I'll set my stop loss at, again, the selected price for my orange line, and I would sell at market. Okay, so now notice what I've just done. I've done something really, really sophisticated. I'm not sure if you picked that up. I traded Aussie dollar on the hourly chart with a 27 pip stop loss. And then I traded Aussie dollar Kiwi on the daily chart with a 50 pip stop loss, right? So two completely different instruments. But let me actually, I didn't realize I made a mistake on this one here. Let me quickly close that order. What I actually wanted to do was I actually only want to risk $50 in wow, that was an amateur mistake. 0.51. That's what 0.15. That's actually what I wanted to do. I just realized my mistake. So I've traded those two instruments, and in both cases, what I've actually done is I've only risked $50, right? So independent of the fact that I traded a daily chart on the one, an hourly chart on the other, my risk in pips was completely different. What I've done is I've stayed true to my strategy. I've set my stop loss where my strategy tells me to set my stop loss. But in both cases, I've only risked $50. Now, of course, sometimes, your stop loss might not get hit exactly if it does go the wrong way because, there's market slippage, there's market gaps. But certainly the $50 is indicative of the kind of risk that you're running on each of these trades. Let's do one more. Anyone else got an idea of of what they want to trade? No one, no takers. Okay, let's choose the killer of all traders, GBPJPY. Let's see what Mo wants to trade EURUSD. Okay, Mo, let's look at EURUSD. I thought that would be the first one that people ask for. Okay, EURUSD is quite an interesting one right now. Okay, looking at the daily chart, I see it hit quite a strong support level over here at what was it, 120. a nice round number. The longer term trend seems to be bouncing up. Let's look at the hourly chart. The hourly chart bouncing up a little bit. Let's trade the hourly chart over here. I see strong support. I also see strong resistance up at that higher level over here. What do you guys think? Trade long or short? We're just guessing from a risk management perspective. Okay, let's trade. Okay, let's actually trade long. Let's see what happens. It might go against us, but we'll see what happens. So what I'm going to do is I'm going to trade long. I only want to risk $50, okay? And this, my risk in pips is 60, right? So the distance between the current price and my stop loss level is 60 pips, okay? And I only want to trade $50. So I'm going to place an order. I'm going to set my stop loss to be, my volume to be 0.08 with a stop loss over here. I'm going to buy at market. Okay, so now I've traded 3 different currency pairs on different intervals with different risks in pip, but in all of them, I've risked only $50. Okay, so now let's get more sophisticated. Daniel is asking me to trade pound. I wonder if you guys can choose an instrument that doesn't have a USD base, just to show the power of the tool, because when you're trading EURUSD or GBPUSD, to work out the risk in pips is really simple. Every pip is just worth $1 or $10, depending on what account you have. But I want to actually trade some kind of cross pair. Let me go back to GBP or pound yen, which is normally just crazy risky to trade. Let's see what's going on here. Okay, so I have an idea of how I want to trade this instrument. And what I want to do is I actually want to set a stop order, a buy stop order on pound yen. And what I want is I want to set a price. If it breaks through the price, I'll set a long position. So I'm going to go ahead and tick this custom entry price line or checkbox on my risk calculator. And I'm going to set my level up here. So what I'm going to do, let me describe this trade. If the price breaks through this line, okay, I assume that the price is going to continue going up. Okay, that's what my hypothetical trade is. All right, this is on a daily chart. This is not going to hit during this presentation, but I need to show you how to use this custom entry price feature. So now, because of this custom entry price, what's going to happen is that the risk calculator is working out the risk in pips between the green line and the orange line, not between the current price and the orange line. And so what I'm going to do is I'm going to set, if that price hits, I'm going to set my stop loss to be over here. Okay, so if we hit that line, we're going to go long with a stop loss at the orange line. That is about 113 pips in risk, and I want to risk only $50. So I'm going to place a new order. I'm going to set my volume to 0.05. I'm going to set my stop loss to be at the orange line, and I'm going to set a buy stop at what price? At 154.114. I'm going to place that order. Okay, so now I'm into the market. Well, I'm not in the market, but I have a pending order that if the price hits the green line, it's going to set my stop loss at the orange line. Okay, and that's how to use the custom entry price order button. Notice again, I've traded GBP yen with over 100 pip risk, but again, I've only risked $50 on this trade. And again, you see the power of this tool. Okay, let me go ahead and trade one more instrument before I show you one more feature. And so Daniel did want me to look at pound. Okay, Good, there we go. So pound, let's see what we think. What I want to do is I want to try trade a limit order of some sort. So what I'm going to do with the limit order is I'm going to trade my limit. Let me look at the 1 hourly chart. Let me see if there's more opportunity to trade some kind of limit order. Okay, what I'm going to do is I'm going to trade a limit order like this. I'm going to trade a buy limit at this orange line, and then I'm going to set my stop loss over here. So what I'm going to set is I'm going to get my green line. I'm going to set my buy limit over here, and with the stop loss at the orange line, right? So what is my trade? If the price touches this, I think it's going to rebound and go this way, and my stop loss is going to be at the orange line. Okay, so let's see what that looks like from the actual trade. I'll set my risk in pips to 50. That means I will set my volume to be 0.13. I'll set my stop loss at the orange line. I'd set a pending order, a buy limit at what price? At 1.324. And I'm going to place my trade. Okay, and now I'm in the market the way I wanted to. And in this situation, I've risked 38 pips, and I've only risked $50 because I've set my volume to be 0.13. Good. I hope everybody is with me. I'm not seeing any questions coming up, so I assume that I'm the best presenter in the world and everything is completely clear, which obviously I'm not, so I'm looking for more questions on the question screen. Okay. Now, I want to show you another feature. I'm going to go on to a completely different instrument that I haven't traded yet, where there's not that many lines. Now, there is a feature called Show Expected Trading Ranges. Okay, the Show Expected Trading Ranges, if you click it, brings up these very interesting lines on the right-hand side of the chart. Right? Let me explain to you what they are. You can see that there's a line, that's the two lines say next H1, next H1. This is the, wow, that's a very bad color. Let me try and choose a different color to draw that in. Let me try yellow. Okay, between these two levels is the expected price movement range for the next hour for the loonie, right? For the next 4 hours and for the next 24 hours, right? This is quite important information. Yeah, I know it's a lot of lines, and when you start adding all kinds of other lines, it gets a bit crazy, but it is very interesting information because it allows you to do two things. The first thing, which is important for me, I'm not sure about the rest of you, but for me is that it allows me to figure out trading around my lifestyle. I have family commitments. I need to take the kids to school. I play a lot of tennis. I wanna go hit a couple of balls with some friends. I'm not always watching my terminal, right? I'm not working for a hedge fund or a full-time trading company where I'm watching the screen in my trades the entire day. I do want to be able to step away from my computer and not have to worry about trades. And so let's just say I want to trade let's just say I wanted to trade Canadian dollar right now, and I need to take my kids to school, right? In a couple of hours. Would I set my stop loss in this range over here, right? I am not sure if I would. Why is that? Well, because I don't want to be away from my computer if things go wrong and my position turns against me, and and I need to take action. I need to make another decision, right? Same thing if I want to trade a position overnight. You can't trade a position overnight if you're putting your stop loss within the 1 hour to 4 hourly chart. If you want to hold your position overnight, chances are you need to set your stop loss or take profits outside of these ranges, the hourly range, the hourly ranges. Okay, and so from a lifestyle trading perspective, you start trying to understand what kind of movements you're really expecting. If we look at the daily chart, only the daily volatility shows, right? And so you know, let's just say I wanted to trade this position long and set my stop loss up here. I would immediately know that I am not expecting the stop loss to hit in the next 24 hours, right? Because this is not the expected daily. Of course, there are spikes, right? So markets can go up and down, but this is about a 1 standard deviation. So there's a 66% chance that the price will remain within those boundaries for the next day. Okay, so start trying to understand not only the size of the position just from a pips perspective, but also give yourself an idea of the amount of time that you think your position is going to hold for, right? It starts becoming quite important. All right. So again, because I'm on the daily chart, it'll only show me my daily volatility. If I move to the 4-hourly chart, it'll show me my 4-hourly and daily volatility. If I move to the 1-hourly chart, it'll show me my 1-hour, 4-hour, and daily. And if I go down to M30, it shows me my 30-minute 2, and and even down to my 15-minute volatility. By that time, you have to squash the chart in order to see the daily volatility, right? Okay. Now let me move on to the 4-hourly to show you a bit of information that's on here. If you notice, when I start moving my stop loss level, there's some information. The volume information changes on those lines. Now, this is a shortcut thing. So I can see that if I set my orange line on that blue line, my volume size is the same as my volume on my risk calculator. So this expected trading ranges really gives you a shortcut view of what your volume should be without having to move your stop loss level around. Of course, once you're moving above it, then the volume goes onto the other side of the chart, okay, because you're assuming you're going short at the current spot price, right? Really interesting question from, okay, I'm going to try that name, Mateus. I hope I got that name right, and I hope I didn't insult you. Really interesting name. I wonder where that's from, but that's a conversation for another day. Mateus, so Mateus is asking, are the price ranges based on Fibonacci patterns? No, they are not based on Fib or any kind of Fib retracement at all. They're actually based on historical volatility at that time of day for this at this time of day for this day of the week. So what Autochartist does is that it looks at the 15-minute, 30-minute, hourly, 4-hourly, and daily volatility on a Thursday. What's the time for me now? So it's on a Thursday at 4:30 a.m. for USD CAD, okay? And says what has happened for that hour of day or whatever it happens to be over the last 6 months. And so this is a reflection of expected volatility. Mo is asking a similar question. Is it similar to ATR? No, it's not similar to ATR. ATR simply looks at the last few candles, okay, whatever you set your period to be, and provides a volatility assessment based on the last few candles. This is not what these trading ranges are, because trading ranges change their volatility. Instruments change volatility. Let me show you what I mean by that. Actually, it's a really, really good question from a risk management perspective. I'm going to launch my Autochartist scanner for a moment, and what I'm going to do is I'm going to bring up the web application, and I'm going to bring that up on my screen because I want to show you how ATR is deceiving. I've never run this one before. I'm just going to quickly set it up for myself. Oh boy. Oh, it's not allowing me. I'm going to put my email address in. Okay, it's too smart for its own good. All right, let me show you something quickly. There's a section called Volatility Analysis. I want to show you how ATR is misleading. This is the price movement range of EURUSD for every hour of the day. Look at it trading an average of 20 pips an hour at 3 o'clock my time, right? I'm in America, Chicago, right? At that time of day, it's trading 20 pips an hour. Okay, at 10 a.m., it's only trading 16 pips on average. Right now, I am at 4 a.m. I am over here, right? And it's trading on average 10 pips. So if you are using ATR, you're getting a view on volatility, which is very, very short-sighted. It's looking at the current volatility right now on your instrument, okay? You're not getting a view of the long-term volatility trend on your instrument. So just be careful of using these very simplistic volatility indicators for when you're making your risk calculations. You can see, interestingly enough, that EURUSD, also if we're looking at the price ranges by day of week, Wednesday trades the most, Thursday less from a volatility perspective. Now, you get some instruments, some exotic instruments like the South African Rand, for example, which has got massive interest rates in their countries. They have double or triple swap days, where you have a Wednesday or Thursday having a massive difference in volatility compared to other days of the week. And so when this expected trading range screen that I'm showing you right now, this is the same information I just showed you on Meta. This is more of a real-time view of what the expected price ranges when calculated based on the last 6 months history for that day of the week, for that time of day. I hope that makes this all makes sense to you. If you want to change your instruments, on this volatility analysis section, there's all the FX pairs or anything. If you want to look at what AUDCAD looks like by hour of the day, you can see what the dynamics are. You have 2 peaks for AUDCAD. You have it, in Chicago time, you have it over here late in the afternoon, and also early in the morning. You have these 2 spikes in volatility. Let's look at, let's actually look at something else. Let's look at some commodities. WTI, interesting enough, late afternoon again, a peak of trade for my time zone. Let's look at some indices. Okay, the yen, obviously peak of volatility. Oh, not the yen, the Japan 225, Nikkei 225 peaks when it opens, right? When the opening of the Asian markets, etc., right? And so you have a very clear understanding of what the volatility looks like for each of these instruments. Hope I've cleared up that idea. The way to get into this tool, into that visual tool, is to launch the Autochartist scanner, click on the world icon, and go to the this link saying launch the Autochartist web application. Okay. But we're not talking about that tool today. We're talking about risk management. That's how we spoke. We stuck to the risk calculator. Okay, with that being said, looks like one of our guesses is moving against us, which is the Australian dollar. We should probably close that position right now. Let's close all of these. Before I let you all go, I wonder if there's any other position that you want me to have a look at and discuss. I'll watch the screen for just a moment. Other than that, are there any questions? Because I think I've spoken enough for today, over 30 minutes on risk management and the risk calculator. Hope I've made everything clear. Doesn't look like anyone's asking any more questions. Oh, what do I think of gold? Ah, Richard, let's quickly see if I've got gold. Oh my gosh, did I just put silver on the screen? Sorry. There we go. Okay, so here's gold. Interesting. All right, let's quickly remove that and see. This is the okay. Richard's asking what I think of gold. Let me just kind of take a longer term view on this. So there's a couple of things that I'm seeing right now. Firstly, the first thing is that definitely reaching some kind of resistance level over here, which it looks like it's been testing since late last year, right? Around 1790, a nice round number, obviously close to 1800. So definitely strong resistance at that price level on the hourly graph. Let's look what I think about this on the kind of the longer term view. On the longer term view, we see strong resistance there, but maybe not at 1800, more at 1830. With very strong support at around 1720. Ooh, it's moving up and down right now. A lot of oscillation. You might be able to take a short-term position. Certainly, I wouldn't be making a very long-term. I personally wouldn't be making a long-term call on gold right now. Maybe trade some of the volatility, potentially a bounce off 1800. If we're going to continue the sideways movement. I think people are a bit confused about gold right now. They're not sure if it's a hedge against inflation or not, about the craziness of the markets. I think until the market decides that, then it's going to choose a direction. But right now, looks like if you're not a swing trader, if you're a trader, probably stay away from gold. If you're a swing trader, you might want to trade between kind of this range here, trade the vol between the range. Richard, that's what I think of gold right now. Mo, okay, let's answer Mo's question. It looks like I'm analyzing everyone's trades today. Let's quickly see what that looks like. Mo's asking me to look at pound Swissy. Let's see if I've got that on my screen here. I do. Pound Swiss franc. There it is. Okay, let's look at pound Swiss franc. Let's look at, I like to look at the long term first. Okay, so long term, I see something very interesting immediately. I'm seeing very strong support and resistance happening at this level over here. And the reason I see that is because it's just bounced off that level. It's hit this level and tested it many times in the past. You can see that it's been a very testing level, and in this situation bounced off that level. Again, when I look at the other side, where do I see support or resistance? I see resistance up at around this level over here. So Mo, you've got an order to go short at 123.40. So let's see what that looks like at 123.40. Wow, interesting. I'm not quite sure why to go short over there. Certainly not on the daily chart. Let's have a quick look on the hourly chart, what that looks like. Oh, I see. Right. So whoever gave you that signal is essentially expecting the previous kind of niggles around that level to give you a little retracement, right? So possible move here, a little retracement, and then potentially either a long-term move or a complete retracement back down to these support levels. So Mo, I can't argue with that. With that assessment. Will it reach this level? Yes. Will the question really for what you're telling me? The question is, will we see a retracement back off this level? If we see a movement up here right now, over the next kind of few hours or the next day or two, then yes, I think if we see a rapid movement up here, you'll see a retracement, because this would be an exceptionally big move for it to follow through to continue. So you'll probably see a bit of retracement. for the short term. After this, it's unknown whether the trend will continue or revert back. But yes, you might see a very short-term opportunity. If you do place that trade, watch it very, very carefully. And if there's money on the table, close your position and then make another decision about whether you think the price will go up or down after that. That's my assessment of that trade. I hope you. Okay, good. All right, good. You're welcome, Mo. You're welcome. Okay. With that being said, again, install the Autochartist plugin. You'll get the Autochartist Expert Advisor, which we went over in a lot of detail in the last 2 webinars. Then you'll get your Autochartist Risk Calculator, drag and drop it onto your chart. Remember, don't manage your risk by moving your stop loss closer. Manage your risk by setting your stop loss where you want it according to your strategy, and then changing your volume based on how much money you want to risk. Okay, so change your volume, play with your volume, right? Good. Thank you, everyone. I hope you have a wonderful day ahead, and we'll see you all in the new year. I wish you all a fantastic time over the festive season. Good luck with your trading over the next few days. Watch the low liquidity during holiday hours. Don't be caught out with low liquidity. And good luck with everything. See you in the new year. Goodbye. Yes, Tony is asking. Tony, will there be a recording? Yes, there will be a recording. It'll be sent over to the attendees of this presentation. I'm guessing tomorrow, after they edit out the first a few minutes of the video.